Lately, the whole world has been focused on one hot topic. When will the U.S. finally lower interest rates? Sooner predictions from many international institutions suggested it might happen in June, but now it's already early August, and the U.S. hasn't made a move. This unusual behavior has sparked a lot of speculation, but if you understand the U.S. strategic goals, you'll know exactly what's going on. Miyozaman, why is the U.S. stubbornly refusing to lower interest rates? The simple answer is because a certain Eastern power hasn't collapsed yet. They haven't achieved their strategic objectives. Don't believe me? Let me walk you through the logic. Then, do we all remember that in March 2022, the U.S. started a new round of interest rate hikes leading to a significant shift in the global economic landscape? Then, for us, the changes in our economic situation have been quite noticeable. Think back to 2020. What was our economic situation like then? Joe, the pandemic China, as foreign trade hit record highs, ports along the coast were bustling with goods and GDP growth exceeded 8. 2021 could almost be described as the best economic year in the last 5 years. So, what changed when the U.S. started raising interest rates in 2022? The answer is straightforward. This round of U.S. rate hikes was aimed at hitting our economy, not just curbing inflation as they claim. Let me explain in simple terms. Muno, what does a U.S. rate hike mean? It means that dollars from around the world will flow back to the U.S. From Europe, Japan, the Middle East, and even from within our country chasing higher interest returns in the U.S. Illegitimate, these funds were spread out across various countries helping to drive economic growth. But now, with the U.S. suddenly pulling back these funds, markets in many countries are facing liquidity shortages. Rent companies run out of cash, they can't pay their employees, and this affects people's incomes. So since the U.S. started raising rates, the world seems to have gotten poorer. Mito, but who is hit the hardest? That is right. As the world's largest trading nation and exporter, when other countries' purchasing power declines, it directly impacts our export data and trade surplus, which in turn affects our foreign exchange reserves. Minotso, however, is the U.S. plan really working as they hoped. Unfortunately for them, there is often a gap between ideal and reality. Joe, the global impact of the U.S. rate hikes. Our foreign trade hasn't collapsed. In fact, it has reached new highs. According to data from the National Bureau of Dosers, in the first half of 2024, China's trade surplus hit a record $430.30 billion, with total import and export volume reaching 21 trillion yuan. Numon, why is this happening? It's largely due to the significant advancements in our high-end industries like new energy vehicles and communicators in recent years. Even in a global liquidity crunch, Chinese products remain in high demand worldwide. Mintomonso, what? The situation like for the U.S. Now, even with interest rates at 5, our real estate market has collapsed. Although the market isn't as vibrant as before, it's still far from a systemic financial crisis. Multimeter, this leaves the U.S. in an awkward position. If they continue to raise rates, the $35 trillion in debt they owe will cost more in interest than the entire U.S. defense bit. But if they lower rates, which many are waiting to see, they risk triggering a stock market crash, a sharp decline in the dollar index, and a massive drop in the dollar exchange rate. Moto, what's the logic behind this? The U.S. ability to maintain its position as the world's largest economy largely hinges on the exchange rate between the dollar and the yuan, which is around 7. 1. Interest rate hikes help maintain this rate, but if they lower rates, dollars will flow back out to the world, making the dollar less scarce and causing the exchange rate to drop potentially down to 6. 1 or even 5. 1. Moto, if this really happens, what would the consequences be? First, the cost for Americans to buy our products would skyrocket, driving inflation in the U.S. to historic levels. Second, the GDP gap between the U.S. and China would narrow rapidly, and the U.S. could lose its position as the world's largest economy. Mito, so why is the U.S. holding out on lowering interest rates? It sounded simple. They can't afford the consequences. Right now, they are hoping that if they keep the pressure on, maybe we'll be the ones to buckle first. If we do, they could swoop in and buy up our assets before gradually lowering rates to avoid a dollar collapse. Minonunto, this is why you often hear the saying, if China doesn't collapse, the U.S. won't lower interest rates.